Hey.
And we're on the pod. Slight technical difficulty to start, which no one listening to this heard.
That's right.
Yeah.
Don't know why we have to talk
Yeah.
about that. Dan,
Yes.
let's start with a tight ass tip. It's been a little
Oh,
while.
I love a tight ass tip.
we ran into a few listeners
Yeah.
at the conference and they were like, bring back Tim's tight ass tips.
Yeah, the people have demanded a tight ass tip, and we're here to deliver on that.
So look, this is a revisit.
Oh,
Don't you love revisits?
do love a revisit.
You're like, where are they today?
Yeah.
So a previous tight ass tip I had laid down for the listeners was use an app like Cash Rewards to get money back on your purchases.
Mm.
So if you have followed that tip, this is for you.
Okay.
Revisit.
Yeah.
Cash Rewards is closing.
Oh.
Yeah. And you've got a month to claim back your money.
So obviously Cash Rewards was not making any money.
There wasn't enough rewarding Cash Rewards. And I actually think it was owned by ANZ, allegedly, according to my beautiful wife, Jade.
Yeah, right.
But yeah, so as soon as I got that email, I was like, whoa, I got money in there.
I gotta go cash
pulled
up.
it straight out. Because I was like, who knows how much money they have left. So if you're on Cash Rewards and you've got money they owe you, go claim that money right now, today. That is your tight ass tip.
This is actually very timely, Tim, because if you're listening to the podcast next month, you might hear an ad from our new sponsor, pay.com.au.
Hey, well, let's just convert our
So we should be talking
spendings into that.
Yeah, wait a month and you'll hear all about it. All right, well, let's dive into the podcast.
Hi, this is Tim. This is just a heads up that all the advice you're hearing in this podcast is general in nature. If you want something more specific, then feel free to contact us.
Drunk accountant, 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 drunk accountant.
Hello and welcome to the podcast. My name is Dan.
And I'm Tim.
And
we are the two drunk
accountants. What the audience don't know is not only did we have some technical difficulty right at the start then, but midway through the intro, I decided to rearrange the entire desk here, which meant as it started, it was just a shambles. And we recorded like 5 minutes of just nonsense just then while I was trying to rearrange things. And then a cable broke.
Awesome.
But we're here now.
That's good.
Yeah, things are well. Tim, what's your one thing?
My one thing. Yeah, good one. I haven't had to think of a one thing for a little while. I'm getting back into running, Dan.
Yeah.
Getting back into running because you know why? It's spring now.
It is spring.
It's spring.
Spring has sprung and so has Tim.
Exactly. Yeah. Like I tried to hang on to it during winter.
Yeah.
And I just couldn't. I was getting up, it was pitch black.
Yep.
Freezing cold. Start your run with a jumper sort of thing, tied around your waist halfway through. It's
good.
Just no good. Just no good. So, went for a run this morning. Went for a run on Sunday.
Pop it on Strava?
I did pop it on Strava.
Yeah.
I already got a kudos from Ryan.
Yeah. Shout out Ryan.
Avid listener.
Ryan, this is a direct message to Ryan, listener of the podcast who has followed us on both on Strava. Ryan, I saw recently you ran 16 Ks in a straight line for an extended period of time.
His runs are in straight lines or like grids.
Yeah.
Yeah, so definitely. Like he's running around some very large blocks.
Yeah.
You like look at it and you're like, oh, that's he's just gone for a little run there. And then it's like, oh, that's 20 kilometers. Yeah. Holy crap! That's pretty much what I did on Sunday.
Yeah.
My family-in-law live in Ourimbah.
Yep.
On like property.
Yep.
Like a farm, basically. And like you go down their street, and all of a sudden, it's just like farmland, or like rural properties. You feel like you're in the middle of nowhere.
Yeah.
And so I decided I'd never gone further up their street than their house. So I decided to just like,
where's it
go?
Yeah,
exactly. So I ran for like 4.5 Ks one way, decided to turn back. It was half an hour.
Yep.
It was just amazing. It was beautiful weather on Sunday.
It was really nice.
Smell all the flowers. The birds were out.
I'm truly jealous, Tim, because
it was the best.
I recently decided to try and start running again and try and get to a half marathon in November. And I was going well. I was up to about 8 Ks. I was increasing by a K a week. I was only
we
doing
went for a
2
run
runs.
in Brizzy?
We went for 5K run in Brizzy. It was fine. And my body says no. It said, you know what, Dan? It's not for you, mate. is not for you.
Running and dance.
Yeah, you've hurt your knee on the dance floor.
You're not a runner, man.
And your shins
On the
are like,
dance floor.
just forget about it.
The knee thing probably is unlucky.
Yeah.
Like it's not often you're dropping it so low like that.
Yeah, I mean, I drop it low.
Yeah, but
I get low.
how often
Yeah.
do you get low?
Regularly. But yeah, so I am truly jealous of your running, Tim. I wish I could do it. I've actually booked an appointment in, this is health updates that everyone wants to hear about, to the podiatrist, because I'm hoping it's just a mechanical problem with my feet and they can fix all my injuries with an orthotic.
Have you told our friend Michael?
I
who's
broke
your
it to
physio?
him.
Have you
Yeah,
told him
I broke
that
it to
you're
him.
seeing another health professional? How did he take it?
Yeah, so not only is offered the ex-man on the street a
He's the ex-man on the street.
physiotherapist, but so is my partner. And so she actually was the one that told me to go to the podiatrist. And so I broke it to Orford and I said, mate, I don't know how to tell you this, but I've decided to pursue other avenues for my running injuries. But don't worry, I told them I've got a physio. It's not you. It's podiatry. And
How did he take it? Did it crush his little heart?
it crushed him a little bit. And
You
then
gotta be careful with that
it
thing.
crushed him a little bit. And then he also said, tell them that I've never treated you properly.
That's what he always says to me anyway.
Yeah,
He's like,
exactly.
I treat him incorrectly as a joke.
Yeah, yeah. I've been secretly messing up your shins for a long time now. Don't undo my good work.
All the needles I give you in your shins, you mean they don't help?
Yeah, those old placebo needles.
Oh, right.
but
Well,
Tim,
I'm keen to hear how that goes, Dan.
Yep.
And, maybe you should take up cycling again
Yeah, I should.
or swimming.
That's what I should be doing. Swimming is where I'm thinking. We're going into summer.
Nice.
Going into summer. But today, Tim, we've got something, everyone's favorite new topic, everyone's favorite new
Yeah.
segment of the podcast. We're doing another installment of
Show us your books. Yeah, so good.
This time we've flipped it around, and you have prepared some financial statements.
I
to
have.
review today.
I have. Yes, I went searching high and low, and I found something that I believe will test you
Yep.
today.
And if you're not familiar with this segment of the podcast, we get a set of financial statements that we've never seen before. Usually the other person has seen them in preparation for this, and we put them on the screen, and in real time we have to review them, talk about them, and analyze what's good, what's bad, what industry do we think these people are, and would we invest right now or not?
Yes.
And
So it's going to be interesting to see what you think about this one.
And what we're hoping to do with this is if you're listening here and you're like, hey, I'd love some qualified accountants who host a great podcast to analyze my books. Well, send us your books.
Show us your
Anonymize them,
books.
take your name off them, take any confidential information off, but send us these books and say, go for it, guys. And we will live on air review your financial statements and tell you all those things.
I was just thinking, like in a weird way, like imagine if Jade was like looking at my phone and in WhatsApp, and then there's all these like unsolicited pictures of books, like financial records, just being sent to me from
Titled,
strangers.
Show us your books. Yeah.
It's like, what is this?
It's like the equivalent of nudes for an accountant.
Exactly.
It's
Yeah.
like, yeah. Send us
You're
a
bearing all.
pic. I pushed the button at the wrong time. But all right, Tim, let's dive in. I'm going to share my screen. If you're watching this on YouTube, you can follow along with us as we go through these.
Yeah,
financial
I think
statements.
it'll be good for people to watch this one and these ones to show us your books, because
Yep.
there is a visual aspect to
Yep.
this. And yeah, you can track along with the numbers a bit better than us just reading them out
Yep.
at you. But we will do our best if you're listening to read the numbers out.
Okay, so Tim, what am I looking at first? Am I going straight
well,
to the
you're on the
consolidated balance sheets?
Yeah, consolidated balance sheets.
Yeah.
Interesting use of the word sheets.
Yeah, and
there's an
consolidated
S.
balance sheets is a sign I hang above my bedroom door.
Yeah. I wouldn't add the S to the balance sheet there.
Yeah.
So there's my first takeaway.
Yeah. Yeah. It's like Facebook, like drop the
Yeah. Drop the
drop the S.
exactly.
All right.
Exactly.
So do you want me
Yeah,
to
look,
just
just
start
dive
telling your
in.
first impressions?
Just dive in. I want to know. What are you thinking? What are you seeing straight away?
On first glance, end of year, 31 December. So this to me says it's a US company.
Maybe.
I also think, from 2020 to 2021, we're bang smack in COVID. This is a COVID year.
Yeah, you're right.
Lockdowns happened in
right.
2020. So that's the first year impacted. And the second year was the bigger lockdowns in 2021. But I don't know how that affected in the US the second year more than the first.
Yeah,
So
true. Yeah.
I guess we'll find out.
Valid point.
Now, if I'm analysing a pair of financials, Tim, and I say pair because that sounded a little bit more naughty, like they've sent us some nudes, I would probably look at the P&L first, but let's start in the balance sheet.
Okay, yeah, true. I mean, look, this is the order they were presented in. Okay.
Yeah.
So,
Good to know.
yeah, I've deleted like 60 pages of notes.
Yeah. I did the same thing with
But this is the order they were presented in the financial report that was published online.
All right, let's start here. Assets, current assets, cash up. And what are we working in here? In thousands of dollars. So there's 2.18 million thousand.
It's a lot.
So it's what's that? $2.1 billion dollars worth of cash, up from 1.98. So a small increase in cash.
Solid, yeah, but solid cash balance. But I guess it means more once we get to the profit and loss to see what their expenditure is like.
Short-term investments are down, so maybe that's why the cash is up.
Though you made a good point there, like COVID.
Yeah.
Some of their short-term investments probably took a bit of a hit in that time.
So have they been devalued or have they been paid out?
Yeah, paid out, or probably a mixture of both. I'd say, yeah.
Accounts receivable up a little bit. Again, maybe this is COVID related, but it's up 2 million. Oh no, 200 million.
That's actually a solid.
That's a
That's
lot.
a 20% increase. So, yeah,
20% increase in the receivables.
$1.2 billion of receivables.
Yeah, that's huge.
It's a fair chunk.
That's half their cash balance. All right, assets held for sale.
Particularly when their turnover is $5 billion. I'll give you that hint. I've just gone to the.
I haven't got to that yet. So that's 20% receivables.
It's high.
That's massive. That's big.
Seems high.
That's big. I'd be worried if our receivables were 20% of our revenue per year.
What's that, like 2.5 months?
Yeah.
That does seem high.
All right.
That does seem high.
Let's keep going. Prepaid expenses. I'm not going to worry about that, but they have prepaid more expenses than they did in the previous year. Total current assets, though, 7.9 billion, down from 8.6 billion. So their short-term current assets have gone down.
Yeah, cash is up, receivables are up, but those short-term investments are down. So
their property and equipment has gone up 600 million.
Well, that's absorbed a bit of cash.
That's definitely absorbed some cash. Their operating lease right of use assets gone up. Intangible assets gone up a small amount, like negligible.
You picking up any clues about what this business might be so far, or
not yet? Because it's
hard to tell.
It's like short-term investments. That makes me think this
could be any business.
Yeah, really. But also, is this like a financial institution of some description? Are they in the finance realm?
Yep.
We'll keep going.
Fair bit of plant and equipment there as well.
That was my other thought. It's like 2 billion of plant and equipment. That wouldn't be a finance business because, like, what assets unless they own buildings and
it's a lot,
office space.
It's a lot.
So we'll keep going. Let's move on to liabilities, shall we?
Yeah, I agree.
Accounts payable. It's more or less the same as it was last year.
200 million.
Accrued and other current liabilities are up 300 million. I'd like to know a little bit about what that is.
Yep, that's a concern.
Their short-term convertible notes, though, completely paid out. It was almost $1 billion last year, and they paid it out.
That's a pretty big achievement to
That's massive.
Do that.
Reduction in debt.
Yeah, and maintain your cash balance.
Yeah. Operating lease.
That may explain some of the decrease in the short-term investments. They cashed those in, paid out the
convertible notes.
Yeah, interesting.
Convertible notes long-term, though, have gone up massively. They've gone from 1.8 billion to 3.6 billion.
That probably more explains
There's your cash. Yeah.
They're taking on convertible notes.
Yeah.
Okay, so they're being floated.
So their debt has gone up.
Yeah.
They have issued some extra cash flow help here. All right. It's good to know that. Operating lease expenses Again, up a little bit, but not a big deal.
And just for people wondering what a convertible note is, I thought I could explain it, but not in good enough words.
Yeah.
So I've just Googled this. It's a short-term loan to a company that converts into equity at a later date. So they basically issued future equity.
Yeah.
At a promise, like at a price today.
Correct. So they have taken on cash help, basically, because they need
Without
an
issuing
injection
shares.
of cash flow.
Yeah.
And I think it's sometimes those convertible notes, if they don't meet certain criteria, just go back to being paid back out.
Paid out.
Yeah,
yes.
rather than converted to
with
equity.
a reward for the person who's
Correct,
pledged
yeah.
the money. Yeah. So
So they've taken on funding for
it's like a hybrid equity.
Yeah, they've taken on funding for something, but their total assets really haven't increased that much.
It's a concern.
And their bank balance didn't go up a whole lot.
They probably had to pay out those short-term convertible notes too. So like, there's an element of that.
Yeah.
Yeah.
But they take on more
they're
debt
taking
to
on
pay out
more
their
to
other
pay out
debt. It's a Ponzi scheme, that is.
Oof. That's a worry. That's a worry.
All right. Additional paid-in capital, treasury stock.
Treasury
Interesting.
stock.
Accumulated company losses. Okay. An accumulated deficit.
That's interesting to see that, isn't it? On a financial report for a very large business to have accumulated losses.
Especially one that has issued more equity this year. Okay, all right.
So,
my initial thoughts is this is either a business that is expanding quickly and they're issuing convertible notes and debt to fund large expansion, but they're probably making not a lot of profit during that expansion because they've got higher marketing costs or investment in plant and equipment or whatever it is.
Yep. Could even be R&D.
R&D, exactly. I won't know any of this until we look at the balance sheet over the P&L.
Profit and loss. Yeah, exactly.
But my initial thought is if they're not a business that's really struggling, they're in growth, fast growth investment mode.
Okay. Yeah. Interesting. It's so hard not to be able to confirm or deny.
It's funny having our positions swapped right now.
Yeah, definitely. Definitely.
All right.
Yeah.
Here we go. Consolidated statement of operations, which is the sign that hangs above your bedroom door. Revenue. So we've got 3 years here. Another reason why I think this could be a US company. They often put their 3 years.
Yeah, it's interesting they
in
did
the
3
P&L.
years.
Yeah.
I mean, look, I'm not against it.
I
More
like-
information's good.
I agree.
Yeah.
Put 4 years. It's not that hard.
Yeah, let's do it.
All right. So
Look at all that empty
29
space in the middle of the page there.
there's space for another column. Easily one
Definitely
more
space
column.
for another
Yeah.
column there.
All right. Revenue 3.5 in 2019, 3.7 in 2020, 5 mil in 2021.
It's quite a jump.
So without going any further, my initial thought of high growth phase
Probably on the money there.
on the money between 2020 and 2021.
That's a 33%
That's huge.
jump. Well,
Jump in
close
revenue.
to. Yeah, it's about 1/3 jump.
My other thought is what business has jumped that high in COVID? And the industries
Good
I'm
thought.
thinking of here are like a tech business of some description, pharmaceuticals. We'll find out when we get to R&D
Interesting.
and these other sections,
Interesting.
if any, as
Yeah.
we go.
I like it.
All right, cost of revenue, 1.7. Research and development, here we go, 1.2.
Interesting.
Sales and marketing jumped from 800 million to 1.1 billion, almost 1.2 billion there. So that's a 33% increase in their marketing cost.
Yeah. Yep.
So that kind of makes sense with revenue then.
It's an interesting line coming up here.
General and administrative.
No, that's not the interesting one.
500. Litigation and settlement. Ooh, that's a $700 million litigation settlement.
It's pretty big.
Who got sued in 2021?
So many people, surely. So many companies.
So
But,
they knew this was coming, and the previous year they went, "Oh God, we need to get some sales in."
Probably. So,
700.
honestly, so that's quite positive. The sales jump, quite positive. 30% sales jump. But their costs have gone from 3.7 billion
To
to
5.5.
5.6 billion. So their costs are outweighing the revenue.
So their gross profit, and I wouldn't actually call this gross profit. This is just profit. Yeah, they've put it here. Income or loss from operations.
Yeah.
They've made a loss already before
Yep.
we factor in anything
Which is
else.
mainly from the settlement on the litigation, 765 million once off. There's never been previous settlement expenses taken up in the prior years, but so without that, they're making a pretty handy profit, really, like 200 to 300 million profit from operations. But so
So yeah, that is very interesting.
it is.
Very interesting.
It is. Yeah.
Okay, so I'm continuing on here. So they've made a loss already before we go to interest expense, before we go to interest income, before we get to net other income. Either way, they'd made a $221 million loss in this business this year.
Check out the year before, though.
A $1.1 billion loss the year before and a $1.4 billion profit the year before that. So what is going on?
It's sort of interesting, though. I think the devil's in the detail there. So the income loss before income taxes, if you look at 2019, it's 390 million profit before income tax.
Yep.
But then also a reversal of income tax. So there's a benefit of over $1 billion of income taxes. So in that year, after income tax, the net income or loss was $1.4 billion in that single year. But then in the next year, they make a loss of $50 million before income tax, and then take up a tax expense of over $1 billion. So like a complete backflip from the 2019 year, netting them a loss of $1.1 billion, pretty much wiping out the previous year's
Tax.
profit or loss.
Yeah.
Now, I saw it before when you were analyzing. There is a deferred tax liability.
Yep. So that could be playing into this.
Yeah, not huge. And then there's also a deferred tax asset, which in the current year was $1.1 billion.
Yeah,
So they're really playing around with the numbers a little bit here with the deferred tax assets.
So let's wipe that away.
Let's just forget that.
That's accounting.
Yeah,
nonsense.
exactly.
What I really want to know here is the operating income or loss,
Which in the last 3 years, yeah.
has steadily been declining, even though the sales have been steadily growing.
2019 was good, actually. 2020 was 50 million loss.
Yep.
2021,
Yep.
$411 million
So
loss,
it's-
including a lawsuit of 765 though.
Yep.
So
All right. So let's keep going through these. We've got the consolidated statements of comprehensive income or loss. Let's forget about that. We don't really. None of that's really telling me too much
I
here.
probably could have deleted that for you.
Consolidated statement of stockholders' equity. We already know this in some element. They've issued more convertible notes and they're trying to raise some extra cash.
Yeah, I think I would skip to the next one, the cash flows. Consolidated statements of cash flows.
Yep.
I love how they just add S's to everything.
Cash
They're like
flows.
a Central Coast bogan.
Yeah. Let's go to
Going to the Westfields.
Westfields. Yeah.
Nelson's Bay.
Is this Westfields? All right. So net income or loss, we have that already. Depreciation and amortization expense has remained fairly consistent each year.
Yeah, so they're adding that back, essentially.
'cause
This
it's
is
a non-cash
Yep, that's
item.
right. This is to reconcile to net cash provided by operating activities.
Yep. So I'm just going to go through and point out anything that's sticking out to me as unusual each year. The accrued liabilities is up. The purchases of property and equipment is up significantly from the 2019 year. So it was only $500 million in 2019, then it went to $875 million, and then $1 billion per year of cash outlay of purchasing equipment.
Yep.
Purchase of marketable securities, proceeds from maturities of securities.
I guess like what I...
Doing a lot of investing.
That's right. That's what I'm seeing here. It's
Yeah.
like, wow, this is interesting. There's a lot of playing around with financial securities
Yeah.
in here.
They issued $1 billion
Which...
of convertible notes in 2020, and they got cash of $1 billion, and they got $1.4 billion of cash in 2021 from the same thing.
Yeah. So, I mean, like net cash from operating activities, $632 million. So that's interesting alone because from operating activities, actually quite good. Net cash used in investing activities was 52 million. So that sort of netted itself out. And then we've got net cash
The financing
used in
part is
finance.
interesting.
Yeah, exactly. So
So that's where they're down $500 million.
that's right. Because they've repurchased some common stock. They've repaid convertible notes.
Yep.
And then really the only thing that kept them afloat here in this part of it is the issue. Proceeds from issuance of convertible notes, which is what you noticed on the balance sheet.
Yeah.
But the last 2 years, they've in 2021 and in 2020, they issued almost $2.5 billion in convertible notes.
Yeah, but if you look further down, like the repayment of convertible notes, this year they've had to repay $950
Yep.
million.
Yep.
But they essentially had to issue the notes to do that.
Yep.
So that's interesting to me.
It's interesting they're buying stock back at the same time. It's just, they're juggling. They're really juggling
It's
here.
a fascinating business.
It's interesting, hey. I've
This
got
is
a
a
few
good one.
clues I can give you later when you're deciding
Okay.
what industry and who it might be.
Yep.
So I've just picked up a couple little clues here I can
Okay.
give you, but yeah.
All right. So let me run some numbers in my head here and tell you what I'm thinking.
Yep. Please do.
What are we looking at? If I'm looking at what you like a debt to equity, I wonder if we can feed this into something and just spit out a few numbers for us.
Maybe.
But you know their total liabilities is 6.7, and their total equity is right. So their debt is increasing. That's interesting to know. Their cash flow position is slightly better, but their current assets are lower than they were. So their current ratio is actually worse from what I can see eyeballing it. Although their current liabilities is 700 grand less, but they essentially just converted a current liability to a long-term liability by issuing more convertible notes. And if it weren't for the litigation, they would have made a profit this year.
I think that's the key. Yeah, that's a key thing there. So you've just got a couple of interesting things here, like growing revenue, also growing expenses, but you had that litigation in the mix. Raising capital through convertible notes, buying back some shares at the same time, but then also a really strange, which you picked up, strange department of their business, which is doing a lot of investing.
Yeah.
Which is a little bizarre.
Is this a clue to the type of entity it is? Or is it bizarre?
That was going to be my hint. So do you want a hint?
Yes.
It is bizarre.
Okay.
It is bizarre. When I was looking at it, I was like, huh.
So my initial thoughts,
Yeah.
they have high R&D.
They do.
20% of their revenue is R&D. They have high sales and marketing costs. Again, 20% of their revenue is R&D.
Yep.
Marketing. So 40% of their total revenue this year is research and development and then sales.
Yep.
That makes me think I'm narrowing it
pretty high.
down
That's
to...
pretty high.
Oh. I was going to say it narrows it down to tech or pharmaceuticals. But then I was like, mining?
Isn't it interesting though? Like tech and mining.
Yeah.
Totally different industries, right?
Because I was thinking high plant and equipment. They're purchasing a lot of plant and equipment. Who needs plant and equipment? Mining companies. Who doesn't need as much sales and marketing? Mining equipment. So mining companies. So I'm ruling mining out.
You would think plant and equipment would be a little higher, I feel.
I would think, and I think there would also be some splits around current assets and things about mining sites and all that.
Here's another hint for you.
Yeah.
Um,
Am I on the right track with tech or pharmaceuticals?
yes.
Yes. Okay.
I would provide one more hint for you.
Yep.
The numbers seem big.
Yep.
Because it's a big business.
Yeah,
but actually, compared to other numbers we've looked at,
It's smaller.
it's not actually that big.
Yeah.
So, I think that's probably...
So this is a smaller
Interesting.
business.
Yeah, like
Than I would think.
Yeah, like you're gonna know it definitely, but also, it's the numbers seem big. So like, it's not a bank.
Yeah, it's
The
definitely
bank
not
would
a
be
bank.
hundreds of,
Hun-
100 billion.
Yeah.
Even like a mining company.
Yeah.
Same deal. I'd say probably pharmaceutical.
I was thinking the same thing. I'm ruling
Probably
out
similar.
pharmaceutical because I think a business this big would be bigger. If you know what I mean? Like there'd be no. I don't think there'd be a pharmaceutical company around this size. They're
Yeah.
either heaps bigger or a bit smaller.
Yeah.
So I'm thinking it's tech, and I'm thinking, what tech company paid out? Was there a headline
lawsuit.
in that period that I'm trying to think of?
While you're thinking of that,
Yeah.
I'll tell you the ratios because
Yes,
I've got
please.
Copilot to actually
Love it.
analyze this for me. So I don't know how accurate this is, but
Spit them out.
apparently the current ratio was 4.42, went up to 5.89 in
Yeah, because the
2021.
liabilities dropped down, but really that's pretend because
It is
they
pretend,
just
'cause-
funded it through long-term
So-
liabilities.
At the same rate, debt
Yeah.
to equity 0.68 in 2020, 0.92 in 2021.
Yeah, there you go. They've increased their debt.
Their return on assets was minus 8.5% in 2020, and it's minus 1.6% in 2021.
Okay.
So, yeah, it is interesting.
Is this a company I know well?
Yes, you will know them well.
Yeah. And is this not an American company?
That is incorrect. It is
an American
company. Yeah, you were on the right. You're on the right train of thought there.
Yeah.
With the financial years.
Yeah,
in the
that's what I
beginning.
thought. But then I wondered quickly if New Zealand had
Interesting.
an end of year.
Ah,
reporting date.
okay. Yeah. Okay. But look, I still think like maybe you were thinking zero there.
I was. But I also thought the financials
I
would look
imagine
better.
Zero would be making profits.
I don't think they are.
That's really.
yeah.
Oh, I should probably know this given
should
I've
do that next
invested in
time,
them. Okay, do you want another hint?
Let me keep narrowing it down.
It'd be interesting if anyone's listening
already picked
has
this up.
picked who it might be.
Yeah.
If you have a guess,
Well, I've got a tick so far.
send us if you got it or not before
if I'm going
reveal.
with the four answers that we try and
Yeah,
get
let's
to.
bounce back to that.
What's good, what's bad, what industry, and who is it?
Yeah.
And would I invest is the last one.
Yes.
What's good? Sales are up.
Sales are up. Yeah.
That's great. What's bad? Litigation.
Litigation.
The increase in the reliance on debt.
Yeah.
That they've used long-term debt to pay out short-term debt.
That's fucked.
And basically just doing it through convertible notes. I'm confused why they're investing a lot of that money.
Yes, and that's the other thing. It's like,
Yeah, it's like
is that
they're
what you do?
gambling a little
Yeah,
bit
is
over
that, is
there.
that really what you do? Yeah.
And maybe we're misreading that a little bit.
Maybe, yeah, for sure.
Yeah, I think that's everything that I'm going to...
So then
that's the obvious.
that's
And then
the
what
goods and
industry?
bads.
It's tech. It's a tech business.
Yeah, I would call it that. Yes,
Yeah.
definitely. Yeah.
It's not one of the biggest tech businesses. So it's not your Amazons, your Microsofts, your Google.
Exactly.
But it's someone that probably grew a lot over COVID.
Yeah, I guess their sales did go up a bit
Yeah.
during the COVID years there. So
Is it business to business software or is it end user software?
end user.
End user. End user.
End user.
And it's a publicly traded company.
Publicly traded company. Tech is on the right general area.
Okay. Right. Give me another hint.
Okay. Another hint. This company has since been purchased
Oh.
and is no longer listed publicly. Maybe that hint's too strong.
I'm blank. I can't think of it.
Really?
I can't think of it. All right. Would I invest right now?
Yeah. Tell me, would you invest? Would you have invested in 2021?
I'd be worried. I don't think I would have invested at that date.
Yeah, and like
Knowing they then sold tells me that they went for cheap and people used their parts, maybe. Or they were able to incorporate them in their processes and whatever it is.
Would you be all right?
Gut them.
Would you be surprised
Yeah.
if I told you that in October 2022, and the process went on for about 6 months to sell the company, would you be surprised if I told you this business sold for $44 billion?
Yeah. I would be very surprised by that because their net assets.
That may help. That may help you figure out who this is.
Their net assets.
Who would pay $44 billion for this business?
Yeah, this doesn't make any sense. They've got assets of 14 billion and liabilities of 7 billion. So net 7 billion.
Is it literally like 12 months later, probably not long
made-
after they've created these financial
And
reports.
they've made big losses. And they're being sued.
They paid out
Yeah.
a settlement.
So I wouldn't have invested at this time.
No way.
I certainly wouldn't have paid 44 billion for it.
Unless you are opportunistic, perhaps, and you saw that it had potential for you to use it in a certain way.
Or it had a name that you could use.
Yeah, it had a name. Perhaps it had a platform.
Yes. Okay. Who was it purchased by someone or a business in, say, like the finance realm?
No.
Okay, all right, that didn't work.
It was purchased by someone.
Was it purchased by, say, Microsoft?
No. Keep thinking. Keep thinking there. Who has $44 billion?
That's what I was thinking. Microsoft, Google, not one of the big banks.
You're going to be shaking your head
or the
when I tell
finance.
you. Do you want me to tell you?
Who bought them?
Elon Musk.
Elon Musk bought them. Yeah, oh, this is Twitter.
Yeah, it's Twitter. What a psycho.
What? Why would you pay $44 billion for this company that is not doing
crazy.
very well?
Influence.
Yeah, right.
Influence.
That's nuts.
What does a billionaire want? They don't need money.
They want influence.
They want a platform. They want to be able to speak to the masses. He pretty much owned Twitter anyway before he bought it because everyone pretty much was on Twitter to see Elon Musk's tweets.
Why were they investing so much?
I'm also a bit bemused by that. I'm like, what
was the
going on there?
litigation that they paid out as well?
Yeah. I probably should have Googled those things.
Yeah.
I have not.
Yeah.
But yeah, $44 billion Elon Musk paid for Twitter.
Hell no.
Crazy.
That is not worth it.
Like, I mean, obviously he's got the money.
Yeah.
He's got the money.
Hey, I'm proud because I at least identified I would have not have bought this business and I would not have bought it for that much.
Would you say it's tech? Like it's tech.
tech.
It's tech adjacent.
Tech adjacent.
Yeah, like
It has all the hallmarks of tech. Yeah.
yeah.
Research, development, sales, and marketing.
Yeah. So there you go. It was Twitter, and their numbers
good
were
one.
not good.
That is a good one.
The numbers were not good, but a year later, Elon Musk buys them for $44 million, billion. And then, you can't get the financial records anymore
Yeah.
because it's a private company now.
So no one will ever know if it's doing well or not.
It's crazy. It's crazy. I thought I would still be able to find the records online, but like,
Yeah.
this is his little pet project. This is his little like passion project,
That's insane.
right?
Yeah, all your hints make sense now. You said things like platform.
Platform.
Yeah. I was thinking software, not like
Yes.
literal platform.
Yeah. That's good. That's it. Yeah. So
'Cause originally when you said you could use it, I was thinking, is this like an accounting software or something that was bought by a bank and they could just like issue their loans or whatever through it
Yeah.
or whatever it happened to be. But
no, I thought I would try and choose one that like
That's a good
you
one.
would know.
That's a
you
great
would
one.
know. You know. So there you go.
that's a good one.
Twitter.
I loved that.
Show us your books. Elon Musk, show us your books. We should send this to Elon.
Yeah.
Be like, WTF, mate.
Yeah. What a terrible investment, Elon.
Yeah, but he's just like pulling the strings in the background of everything because of his influence on Twitter.
Exactly, yeah. He was basically running the White House for a few months there.
Oh, sorry. It's known as X now as well.
Yeah.
Everyone has to say now. Formerly known as Twitter.
Yeah, well, because there's no, we were talking about the 0 verbs last week. There's no verb to X. People still say they tweeted.
Yeah, tweeted. Yeah, exactly.
don't say I
yeah,
X'd.
Yeah, exactly. True.
Or I posted on X.
Yeah, so, And I mean, like, it is interesting as well because after Elon bought Twitter, he made so many people redundant.
Yeah.
So he obviously saw, like, this
Those
business,
inefficiencies.
is
Yeah.
super inefficient.
Yeah.
And I think, that was picked up on
I think
in
a lot
the
of
analysis.
a lot of the inefficiencies that he gutted as well were like content monitors.
Yeah.
So,
Exactly.
So he turned it into
Exactly.
like, say whatever you want on here. I don't care.
Yes, exactly, exactly. So if we looked at like Facebook revenue turnover, in 2024, Facebook's revenue turnover was 165 billion. Compare that to Twitter's in 2021, which was 5 billion. So yeah, Twitter just wasn't a profitable social media.
Yeah.
It was like very
'Cause it's hard
popular.
to market on that. I guess.
Very
Like,
popular, yeah. Like everyone would be posting their opinions, and
Yeah.
it was a place people would go, but there wasn't a lot of money making opportunity. And then obviously since then, now you've got to pay if you want to be a verified user and things like this. So whereas they used to give ticks to
Anyone who
like
was famous,
celebrities,
yeah.
So he's trying to make it a bit more profitable.
I've just Googled what's Twitter's value now, and the Google AI summary
Yeah,
has told me that it's hard to tell. It's
Yeah.
conflicting.
yeah.
Some people are valuing it at the purchase price of 44 billion. So it's just worth the same as what it was 2 years ago. Nothing's changed.
I don't think it was ever worth that, but anyway.
Other sources, like Fidelity, valued it significantly lower at around 9.4 billion in 2024, late 2024.
I would love to know how he came up with a business valuation of $44 billion.
Nah.
Like, what multiples are we using?
He tried to pull out of it.
Yeah, he did.
Yeah,
he
and
did.
then they sued him. Yeah.
It's crazy. It's
If you were
crazy.
the owners, if you were the shareholders of Twitter at that point,
Yeah.
you'd be laughing. You'd be like, hell yes,
Yeah.
buy me for $44 billion.
Exactly. It's. Here we go. In March 2025, actually, Musk's artificial intelligence firm XAI acquired X in an all-stock transaction valued at approximately $52 billion.
That's just a capital gain thing.
I mean,
It's
yeah,
just
it's
trying
just
not
like-
to.
It's just a restructure. That's a restructure.
It's just a restructure. That's not a value.
There you go. There you go,
Well, that's
Dan. That was a good one.
Tim. Thank you for that. I appreciate it.
You're welcome.
Hopefully you enjoyed this in audio and video format. Make sure you find us on YouTube. Follow us on Instagram, on LinkedIn, on YouTube, all Two Drunk Accountants. Shoot us an email at twodrunkpodcast@gmail.com. Make sure that you send us some of your financials, and we'll
Show us
tell
your
you
books.
what's good, what's bad,
Yeah.
would we invest, and we'd love to even have a little chat with you. But
Yes.
that's optional. That's optional.
That is optional, but yeah, we would love that. Show us your books. Send us your books. And we will analyze that.
We will be kind and ruthless with your spend. If
Hey,
it-
we might even make you an offer, $44 billion.
yeah, we'll Shark Tank it.
Yeah.
Yeah. All right. Well, thanks for listening, everybody, and we will calculate it. Bye.
Hey.